Hey guys, John here. Welcome to Stock Merchants Podcast. I am really pumped up and excited to share with you today sort of a story that happened and two really interesting things. So the first thing is this idea of protection, having a backup. And there's something really crazy that kind of happened this morning where like all of my trades just stopped, which was kind of insane. And then the second thing I want to talk to you about is the idea of taking advantage of opportunities, because something really interesting happened. Some of you guys know ClickFunnels, coolest thing on I don't know, it's just changed my life so much. And it's like the key to building an online business asset. And like the co-founder, Todd Dickerson, lives in Atlanta, which is I'm like, oh my God, no way, that's so cool. But I never really I never had any way to connect with him or anything. I thought it'd be the coolest thing ever. I mean, because it's freaking co-founder of ClickFunnels. And as you guys might know, the company, they're trying to get valued at $1 billion because they have dozens of million in monthly recurring revenue. And so they want to become a unicorn or whatever, and they want to get $1 billion valuation. And so they go to Wells Fargo, they go to the bank, and something really interesting happens. So that's sort of what you have in store today. I'm really excited to talk about it. And it's a pretty freaking exciting stuff. So with that said, thank you so much. I hope you get a ton of value out of this episode. I will see you after the intro. Bye. So the big question is this: how do investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Okay, so you might be able to tell this hallway, besides being super echoey, is very dark. And the reason why is because for some reason at 10:30 today, all the power went out. So all of my computers just turned off at once. It was kind of crazy, kind of insane. And so that's why it's super dark in here, because the power freaking went out. And so this morning we were making trades, and it was actually a really super fun morning. A lot of positions dropped 15, 20, 30, 40%, which is kind of insane. We netted 4% today, which I'm pretty happy about. But as soon as we net those trades, the power went out. And so if the power goes out, obviously, you can't make any more trades. And it's a little bit scary because if the power goes out and you're in the middle of an investment and you're what are you gonna do, right? I mean, think about it, right? You own say 40 or 50 grand in a stock or something, and you're making this intraday trade. And these trades move quick, right? So in a span of 4 or 5 minutes, the stock might go up or down 30%. And so that's why you kind of have to know what you're doing. And as long as you know what you're doing, you should be good. But if your power goes out and your computer shuts down and you can't access your trades, what are you supposed to do? Because in reality, you can lose literally 5 or 6 figures in a day if your power goes out and you have no way to access your investment. Now, thankfully, there are a lot of brokers where you can get their app, right? And you can have it on your phone. So hopefully you won't be screwed over too much. But if a stock goes straight down and you're in that position, what's going to happen? What's going to happen is you're going to lose a lot of money. And thankfully I didn't have any open orders either. But if you have open orders and then, you don't want to actually have those open orders get filled, or maybe the open orders look really bad after a little bit, you're not gonna be able to cancel those orders if your power isn't turning on. And so, for computers, right, you can get a big battery that you plug into the wall, and then it plugs in your computer, and it'll give you 5 extra minutes of power or whatever. And those 5 extra minutes can be the difference between, missing out on a trade, or maybe say you own a stock and the stock's going up and up and up and up and up, and you're oh my gosh, I mean, the coolest thing ever, and you want to sell it at the top, but the power goes out. What do you think is gonna happen? Well, what's gonna happen is pretty simple. You're gonna get trapped in the trade if you don't have any way to access your accounts. And as soon as you're trapped in a trade, what happens? Well, first thing that happens, you don't get to take your profits. So all the money you made, if it goes back down, you're gonna lose it all. And then secondly, if you get stuck in the trade and you can't take any money, if it goes down and down and down and down, you're gonna lose everything. And so those 5 extra minutes that you can kind of save by having some sort of battery backup or something like that, having some kind of protection, some kind of safety plan, can literally be the difference between losing tons and tons of money and then actually having the 5 minutes it takes to close the trade in a really awesome position so that you make a bunch of money on the trade. And as soon as that happens, you make money on the trade and you get out of the position before your computer dies. But you need to have just a little bit of leeway. You need to have a little bit of protection so that you sort of have the ability to actually do that. And so that was the first really massive lesson this morning, is just investing a little bit in having a second plan, right? A second plan is really critical because, the first plan, right, is obviously, you trade stocks to make money, easy peasy, and that's that. And it works really well. It's a phenomenal strategy. But there are always those extreme cases. There's always that 1 out of 100 chance that the power goes out. The power goes out here pretty frequently. I don't know why, but if the power goes out 1 out of 100 times, and if you get in a trade maybe 1 out of 10 times. Like there's a 1%, maybe a 1% of a 1% chance that something goes wrong. But if the 1% of that 1% can cost you $10,000 if it happens, then it's worth spending $15 or something on like a little battery to plug your computer in, or whatever that like nominal investment is for protection. Because in the one case that you use it, if you only use it once for the next decade, it can make back the entire amount that you invest in it at once, because you kind of put the money in the protection up front, and then it lasts hopefully a really long time as long as you have quality stuff. So that was really, really interesting this morning. And anyway, there were some really great trades this morning. I don't know if you guys are trading this morning, but there was this one downward wedge on, I think it was LLIT. I usually don't remember the tickers, but my dad asked me, and so I remember the ticker magically. It was really, really phenomenal. Actually, a really great lesson I learned on LLIT. The stock went up about 30%, and what happened is I only had a 5% net gain on it. And the reason why is because I was only looking at one time frame. And this is really critical because like if I looked at 2 time frames, I would have sextupled my profits, which is a pretty great thing to do. But basically what happened is I had like my one computer and I had my side computers, right? My side computers, I really didn't have any of the stocks on it. And right now I'm doing like 1 or 2 positions at the same time. So it makes no sense whatsoever to not have side positions. But basically what happened is you have the 1 minute chart up in front of you. And when you have the 1 minute chart up in front of you, you're looking at it really, 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 really close, and you're zooming in a bunch. And so what I've done is I zoomed in really, really hard on the downward wedge. So you have the wedge, right? And then it breaks out of the wedge. And so I zoom in really close on this wedge, and I make it so that the top of my screen, the top of my horizon, top of my perspective is the top of the wedge. And it's about 95 cent stock. And so I made it so the top of my screen was at $1, right? And so because I saw the top of my screen at $1, I thought, okay, well maybe it's gonna go $1. Now, what happened is about 15 minutes ago, I'd actually gone through, screened all my stocks, and put long-term support resistance lines on each of the stocks. And for this position, the long-term resistance lines weren't till about 110, 120. And the average conservative price was about 116, 115. And if you looked at the wedge, it was about a 10 cent wedge, starting at about 87 cents to about $1. And so based on that, you're looking at a target of about $1.13 to $1.18, give or take, just based off the resistances and everything else, which is a solid 25% more than where we started at, which is pretty freaking amazing. But for the chart I was looking at, the chart only went to $1. And so what you need to do is you make sure, like, if it's not your main chart, because I understand that you want to kind of zoom in sometimes, and very often I'll zoom in just to make sure that you can actually see a technical pattern. You want to make sure you have a second chart up that gives you sort of a second perspective. And because what you want to do is you want to make sure that you're able to see like where you want this price to go to. So for me, spoiler alert, the stock went to $1.18, so not necessarily $1.20, but went to $1.18, which would have been a lot of money for me. And I'll tell you why I didn't in just a sec. But basically, you want to have a second chart up that has like the entire range and is zoomed out a lot more than your first chart, that you're focusing on a little bit more, just because you want to make sure you get the right entries and the right exits and the right stop losses and stuff like that. And so basically that's what happened, right? We had a super zoomed in one, but I didn't have that second chart. And because I didn't have that second chart, I didn't realize that the price was probably going to go to where I said it was going to go, because I mapped that out 10-15 minutes ago and I wasn't focusing on it. I wasn't paying attention to it. Because I wasn't paying attention to it, I didn't really think about that price target. I didn't really see this as a $1.15 stock. Instead, I saw it as a $1 stock, which was pretty high, but considering it's like 95 cents, which were bought. Because I saw the wedge and I was like, well, I guess the top of the wedge is the top of my screen. And there was a pretty hard resistance at 1 they had to break through. And because I didn't have that second graph up to expand my horizon, expand my perspective, basically what I did is I sold about 3/4 of the position, 300 shares of the stock, as they were going up into the $1 range. And I sold literally 3/4 of the position at an average price of about 97, 98 cents. Which is really, really bad because the stock went up another 30%. And the reason why was, it was a great setup. It was a phenomenal downward wedge flag. It was amazing. Everything about it was literally awesome. But the reason I didn't stick with it is because I didn't have that perspective on sort of what the other part of it was going to do. I didn't have that perspective on what the upside really was. And because I didn't have that perspective, I freaked out and I started panic selling because I saw it going towards its pie on the chart, and I was like, well, crap, it's going to stay up there. And also, I think this is probably the bigger reason, is because I wasn't very patient. This movement, it took about 5 minutes. Usually with downward wedges on 1 minute charts, I like to see it move really, really, really quickly. But this movement, it took about 5 minutes. And the reason why is because it was consolidating above the 9 exponential moving average. And so I would set my stop losses below the 9 exponential, so the stop losses never got triggered. And it was literally just me selling above the price because I didn't think it was going to go over. And the moment I finished selling, a quarter of the position goes up 25%, which is pretty freaking great nonetheless. But you miss out on a lot of that if you don't have that perspective of having a second chart and having it zoomed out to where you know what's going to be, and then just leaving your stop loss. Like my stop loss was at 92 cents, which is about a 1 to 6 risk reward ratio. And like all I had to do was leave it at my stop loss and let it go and just not care as much. So that's another thing, like don't care. Like you got to care, but not that much. And so that was really what I had to do with that position. And I had to sort of back away from it and not care that much. So if I could have done that, it would have been a phenomenal trade, but it made 6 times more. So that's sort of the big lesson from that, is to always have sort of those two charts next to each other. So, I mean, it applies to anything, right? It's not just zoomed out charts. Like it's also extremely useful to have a 1 minute chart next to a 5 minute chart past about 10 o'clock, 10:15, because stuff starts to slow down. So same strategy there. It's really useful to have a 1 day chart versus a 1 week chart. With all kinds of trading, it's really, really important to sort of just look at different perspectives and have a way out. Okay, now with that said, I hope you enjoyed that. Last thing I'll talk about, which I think is probably one of the more exciting things. I don't know if it's as exciting as stocks, because I mean stocks are awesome, but so basically ClickFunnels is right. They want to have their company valued at $1 billion and be like, holy crap, we made it to unicorn stage in I think 3 years, maybe 4 years. It might have been a little bit longer than that, maybe 5 years, but it's still not very, very impressive nonetheless. And so because they want to be sort of classified as a $1 billion company, they've got the revenue to support it. If you have recurring revenue, which they totally have, they have 100,000 people paying them, I would guess on average like 150 a month. I don't know what their exact numbers are because they're a private company, but I mean, you do the math on that and you've got like 15, 20, 30, 40 million a month coming in. And they've got they got the numbers to get to $1 billion company, because recurring revenue is really, really powerful and you can sell at high leverage multiples. I don't think they're gonna go public, and that's what so my dad's a banker, right? He works at Wells Fargo, he sells bonds. And he's telling me about how his friend, who works sort of in the mergers, acquisitions, and I think it's like business valuation team, he was talking to Todd Dickerson, who, like I said earlier, lives in Atlanta, who's the co-founder, the CTO. And I was like, whoa, what? That's insane. That's so cool. No way. And so basically the story is, he comes in and he's talking to like all these bankers, trying to figure out like how he can get his company valuated. Right now they're at like 700 million, they're at like 800 million, and they want to bump it up to $1 billion, right? And he's trying to talk with all these bankers about how, can they get the valuation, or how can they get it valued, and who can look at their numbers, and how Wells Fargo, I'm assuming, since my dad works at Wells Fargo, how Wells Fargo can value them as a company, which I thought was so crazy cool. I thought it was cool for 2 reasons. The first reason is the last time they got valued at 700 million, I doubt was very recent. And so it shows that instead of trying to sort of get valued at one place for 700 million, they get valued at another place for 800 million, they get valued at another place for 900 million, when you have the same underlying financials, like that's not a good strategy, right? You want to increase your actual results before you ask for someone to grade you again, right? If you take a test, you submit the test, you get a bad grade, and you ask for someone to regrade the exact same test, like you're not going to gain as many points as if you maybe change some of the answers and then ask them to regrade that. I'm not saying like lie and do that. What I'm saying is you've got to change the underlying asset that you have before you get something regraded. You have to change sort of the actual investment that you've made to make it more valuable before you go out and try to get something readjusted or regraded. Like if you take the SAT 1 week and then you take the exact same test the next week, you're probably going to get a very, very, very similar result. And so rather than try to play off of the deviation in the actual results, you should instead maybe take it a couple of months apart and study a bunch, and then you can see a noticeable difference because you actually add more value to who you are, to the underlying, which is really, really powerful. And so that's what they've been doing, which is awesome. And so Todd comes to Wells Fargo and he's like, hey, can you guys value my company, or Russell's company, or whatever? And I'm like, what? That's insane. And then he's talking to me about his friend who's doing the work. And I'm like, dude, that is so cool. Holy crap, that's awesome. And then he's like, hey, do you want to like meet this guy? And I'm like, holy crap, are you kidding? Of course I want to meet him. He's Todd Dickerson. And as I came through, I realized that like it's really important that in any aspect or wherever you are, it's massively critical that you take advantage of like every opportunity that you have and everything that just kind of comes your way. Like I didn't think I was gonna be meeting this guy 5 days ago, but now like that I have this connection, I have this neutral third party that can act as a bridge. Like what's it gonna do? It's gonna make it like way easier to get it done and to have that conversation, which is super exciting. So hopefully you guys are going to be getting a dope Stock Market Secrets podcast episode from that. It'll be super cool. And he's just like, oh my God, so cool. And hopefully we'll get to the $1 billion mark. So those are the stories for today. That's the big takeaway. That's the big message. Make sure that you go out there and you crush it and you really take in whatever you can the moment that you have that opportunity, because that will be the big differentiator between failure and massive success. So thank you guys so much. Bye. Want more Stock Market Secrets? If so, you'll get your free copy of my best-selling book, 9 to Noon. You get your free copy plus $11,176 of unannounced bonuses. It took me years to uncover, completely for free at 9toNoonSecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% daily.